Good day, everyone. Can you hear me? Okay, great. For those watching, I would like to know what state or what part of Nigeria or Africa you are watching me from. Yes, I would like to know. I would like to know what part of Africa or Nigeria you're watching from. So we are live now. Okay, today I will be talking about a very, very crucial and important subject matter in the business of trading. Um, because there is one thing you need to know, that Forex trading is a business, and business should be treated with all intentionality. And that is why I will be sharing with you 5 reasons why novice traders lose money. I'm sure you must have lost money before. Yes, especially beginner traders. You must have lost money before. So I will tell you these 5 reasons why you lose money. So good. Um, yes, these are the 5 basic reasons I will be touching, and I'll be taking my time to explain to you. And if you have any question, just drop it in the comment section, and I will do well to answer you. So, number one reason why novice traders lose money is gamble on charts and not trade. A lot of persons, see forex trading as they don't see it as a business. They see it as a quick money making scheme, and that is why a lot of persons lose their money. You need to understand that forex trading is a business, and you don't need to gamble into it. When you talk about gamble is anything you don't have knowledge about, but you try to do it because you just feel you're going to make money from it. However, you need basic knowledge of trading before you can be able to trade and make profit consistently. And that is why gambling is one of the reasons why you are losing your fund. I can see a novice trader trying to buy a currency because he or she sees the trend or the candlestick going up, and immediately he or she sees that the candlestick is going down, he says, oh, the market is going down, and he tries to sell off and sell again. And the moment he or she sells, the market begins to go up. The novice trader intention, while seeing the market going up, is that the market will keep going up. So he buys without any knowledge or any reason why he is buying, but because he saw the green candle going up. And when the candle begins to reverse, he sells again with the mindset that it's now reversing. So a novice trader does not have that strategy, that knowledge that tells him or her why he should buy or sell. And that is why this webinar has come to you, so that you could learn not to gamble on the chart, but to be a master of the trade. You need to understand how to take your trade, how to exit your trade, and these are the things that will be a driving force to influencing your decision either to buy a currency or to sell a currency. I hope you are learning, so keep learning and follow me through. Yes, before I proceed, I want you to understand that there is a workshop coming up. It's our first workshop, and I want you all to sign up for it. It's called the Forex Fundamentals, where you'll be learning the nitty-gritties and the important knowledge of how to trade Forex. This first workshop is free of charge. Of course, the next one, the second workshop, every participant would have to make a deposit of minimum of $100 to be able to participate in that workshop. So you need to understand that. You need to take advantage of this workshop now, the Forex Fundamentals. Thank you. I proceed. Now, gamble on chart, as I've explained to you. Let me take you through the chart and explain to you what gamble on chart is. Let me take you to my chart and explain to you what gamble on chart is. Okay, great. As you can see my chart right now, so a beginner trader sees the candlestick going up without anything guiding his decision. He just buys. There are times that a novice trader will just be lucky, and when he buys, the trade begins to go in his direction. But let me tell you something, it's not always like that, because the novice trader will be made to believe that because the market is just showing a sign that it's going up, he or she just buys into the market without any decision. Without any confirmation if it was a buy trade or a sell trade. So when he or she buys and the market goes in that direction, he or she thinks, oh yeah, I'm doing the right thing, and then he or she takes more risk in opening another position, and in taking more risk, it will wipe off both the initial profit and almost all the capital, if not all. And that's why gambling is what a novice trader is doing. Anybody without the knowledge, the fundamental knowledge of trading forex, engaging in trading forex, the person is only gambling without any strategy, without any knowledge. You are only gambling, and that is why we've brought this webinar to you to help you understand why you are losing your trade and why you shouldn't lose your trade next time, and also that you shouldn't miss the webinar and the workshop where we'll be teaching you the fundamentals of forex trading. So great, I will proceed. The next one is, don't know what is margin, and they start trading with a small capital under $100. Novice trader, why they lose their fund is because they don't know what is called margin. They don't know. They have no idea what margin is called. And this is one of the basic reasons why beginner traders, novice traders lose their funds. Now, you need to understand that margin is a good faith deposit that a trader puts in. So now, let me break it down. I can see, let me use a name here. A name I can see here. Okay, there is a name called Timileyin Akintunde. He said, I am watching from Ibadan, Oyo State, Nigeria. Great. So now, imagine Timileyin wants to start trading. Then, Timileyin opens a live account with OctaFX. Now, Timileyin now deposits $100. Are you with me? Timileyin deposits $100. I need you to understand this. Let me pick my pen so I can illustrate to you. Now, okay, Timileyin deposits $200. Let me use this to explain to you. $200. Now, guys, this $200 that Timileyin deposits, I'm trying to use my pen to spell it out. Okay, this I hope I got that. Anyway, let me just tell this margin, this deposit of $200 that Timileyin puts into his account is what is called margin. Now, because when you want to trade live, or even when you are using a demo, but of course we're targeting those who want to trade live, because when you want to trade live, you mean business. So when you want to trade live, the capital you start with The money you deposit into your trading account is what is called your margin. Your margin is your deposit. That's how they call it. They call it sometimes they call it the required margin. They call it the required margin. So your margin is what you deposit into the account. Do you get it now? So essentially, it is the minimum amount that a trader needs in the trading account to open a new position. I hope you get it now. So when you want to open a new position, you want to begin to trade, you deposit $100 or $200. That money you deposit, either $100, $200, $1,000, $500, $10,000, these are what we call your what? Your margin. It is your deposit, the capital you put in to trade. Are you getting that now? Awesome, awesome. If you have any question, just drop it in the comment section below and I will answer you. Okay, great. Somebody said, hope I haven't missed much. Okay, no, you haven't missed much. Another person said, no, we are okay, yeah. We have just started. Yes, we've just started. Okay, great. Now, you need to understand that. Okay, let me erase this so that yeah, thank you, Timilei. I don't know, though I didn't take permission to use your name, but I'm sure you know how to use your name to give this illustration. Thank you very much. Awesome. So now let's proceed. So as I explained earlier, margin is your deposit. The capital you start with is your deposit. Awesome. Awesome. Great. So now as a beginner trader, you need to understand what margin is, your required margin. Sometimes starting with a fund or a margin below $100 is not good enough. It's not good enough. It's not good enough. You know, $100 is even the minimum, which means the one that we can just advise that fine, you can just start with $100. However, we recommend that if you have more than $100 to start, you know, to deposit, to use as your margin, you can also use that. Are you getting it now? Great. Great. Awesome. Awesome. Someone said, I'm on track. I've created an account, but I haven't created a trading account. Awesome. So you are learning what a margin is so that you can have the knowledge of what margin is when opening your account. Great. So I want to remind you again, the Forex Fundamental, you should not miss this workshop. It's our first workshop. You are signing up for free for this workshop. The next one, if you miss this one, the next one you'll be required to deposit a minimum of $100 in your account before you can start with us. But for this first workshop, it is free. Let's proceed. Now, beginner traders, you know, previously I said novice traders, we should also call beginner traders, they don't understand what margin is. And also the third reasons why a beginner trader loses his fund is because they choose too big leverage. They use big leverage. You know, your leverage, the use of your leverage should be in according to the size of your account. You use margin to create leverage. Leverage is the increased trading power that is available when you are using margin account. Okay, let me use this. I'm looking for a perfect illustration, you know, to explain what margin is, you know, in a very simple way. Leverage is in a very simple way so that you can understand. When you say leverage, from a general sense, leverage, when you say someone leveraged on something, which means the person takes advantage of a particular situation or an opportunity. Oh, I leverage on my connection with him to get the job, which means I used the opportunity that I have with this person to get the job. Now, when you want to trade, leverage is that opportunity to trade with a bigger account size even while your margin is small. Let me take you back to the graphic illustration here. I want to explain this to you. I'm talking about leverage now. Leverage. I'm talking about leverage. Why beginner traders choose big leverage, and they blow up their account. Now, this is what we call leverage. Leverage are always in ratio, which means when you might see 50:1, 200:1, 500:1, 1000:1, 250:1, 200:1. Leverage are in different ratios. Now, I will be using this illustration of 50:1 to explain to you what leverage is, which means the opportunity that leverage is given to you. Now, I will come back to using Timileyin. Yes. Thank you, Timileyin from Oyo State. Thank you for watching. So now, Timileyin opens an account with OctaFX and deposits 200 naira. Timileyin, however, proceed to choosing a leverage of 50 to 100. Now, what does that mean? That clearly means that Timileyin can cover a position that is 50 times his margin. Am I communicating? Now, 50:1, which is the leverage that Timileyin chose, means that Timileyin can cover a position that is 50 times his account size. What do I mean? Now, Timileyin has $200 in his account, right? $200 in his account. Timileyin uses 50:100 leverage. Now that's $200 times what? Times 50. This goes to show that $200 times 50 would give Timileyin the opportunity, the privilege to trade a position that can cover $10,000. Am I communicating? Do you get that? Now, so Timileyin with $200 opens an account using a leverage of 50:1, giving Timileyin an opportunity, a platform, how do I put it now? A collateral of $10,000 worth of position to open. Do you catch that? Leverage. Let me simplify it again. Leverage is like a borrowed fund. So when Timileyin deposits $200 and uses a leverage of 50:1, Timileyin is simply telling the broker to give him the opportunity to borrow $10,000. Do you catch that? If you understand that, let me know in the comment section. If you have any question, kindly drop it in the comment section. So Timileyin simply has a leverage of $10,000 just with a margin requirement of $200. I want to believe you get that. If you have any question, call my attention to it and I will address it. Great. Now, we need to proceed. If you have any question, do well to ask in the comment section. Awesome. Now, leverage allows you to trade positions larger than the amount of money in your trading account. I've explained it earlier. Leverage is expressed in ratio. Leverage is ratio between the amount of money you really have, awesome, I love this, and the amount of money you can trade with. So in my illustration, I said Timileyin comes with a deposit of $200, which is the amount Timileyin really has is $200. And the leverage, which is $10,000, is the amount Timileyin can trade with. I hope you get that now. That is leverage. I've explained to you what margin requirement means and what leverage means, because these are the things that makes beginner traders lose their fund. So which means when you over leverage your account, when you borrow too much, because the bigger the leverage you use, the more exposed you are to risk. The more exposed you are to risk, of course, because you are using bigger money, bigger funds, to cover bigger positions. So you are exposed to more risk. These are reasons why beginner traders lose their fund. Now, I will go further in using and giving an illustration. Follow me. Great. Now, I want to give an example of leverage and margin. Leverage and margin. Awesome. Now, here we have trader X, right? Let me use Timileyin. Yeah, let me use Timileyin. Let me say Timmy. Awesome. I'll just use Timmy. I'll use Timmy. Okay. Timmy is trader X, and this illustration is just for illustration purposes. Who else is here again? I'm seeing I'm seeing Joseph. I'm seeing Ademiju Oluwatobi. Okay, now let me use Oluwatobi, Ademiju Oluwatobi. So I'll just use Toby. Right? Awesome. Toby. Now, this is an illustration using Timmy and Toby. These two persons are traders, right? They are traders. They are both traders. Now, the two of them have a trading capital worth $10,000. Timmy has $10,000 in his trading account. Toby has $10,000 in his trading account. Now, the two of them use a leverage of Timmy use a leverage of 50:1, which is 50 times his account size. Now 50 times Timmy's account size is $500,000. Now Toby, on the other hand, uses 5:1, which is 5 times of Toby's account. Now 5 times of Toby's account is $10,000 times 5. That is $50,000. So Timmy has a leverage of 50:1, which means he can cover a position of $500,000, and Toby has a leverage of 5:1, which means he can cover a position of $50,000. Now, each of them makes a loss of 100 pips. Are you following, guys? Each of them makes a loss. Look at it here. They made a loss of 100 pips, right? Now, on that 100 pips, because Timmy is using a bigger leverage, he will lose more. He's using a bigger leverage and a standard lot size. You want to understand what lot size means, you have to attend the workshop where I will take you through every nitty-gritty, every area, every fundamental aspect of forex trading. So I'm just giving this for the webinar purpose and for illustration purpose. So Timmy loses $5,000 because he's using a leverage of 50:1 and also a standard lot size. Now, Toby is using the same standard lot size but a smaller leverage. So now, when Temi is losing $5,000, Toby is losing $500 on the same position, different leverage, same standard lot size. Temi loses 100 pips and loses $5,000. Toby loses the same 100 pips and loses $500. Why do you think this loss is different? Because of their what? Of their leverage. So as you can see, Temi lose 50% of his account, while Toby will lose 5% of his account. After this loss, Toby will have $5,000 remaining in his account. Temi will have $5,000 remaining in his account, and Toby would have $9,500 remaining in his account. Now, which trader do you want to be? Do you want to be Temi, who loses 50% of his account using 50:1 leverage, or you want to be that trader Toby, who loses 5% of his account and using 5:1 leverage? I tell you, Toby would recover his loss quickly, while Temi would recover his loss gradually but not quickly, and might even end up losing more if the risk management is not addressed. Temi is a typical novice trader. Temi is a typical novice trader, and that is why he's losing so much. But Toby is that trader who has taken time to understand what margin is, what leverage is, and how to use them. I know you want to be Toby, right? The trader that always wins. For you to get to that stage, you need the fundamental knowledge of trading Forex. And that is why you shouldn't miss the workshop. You shouldn't miss the workshop. The link is in the description section below. Click the link, get registered. The first workshop is free for everyone to participate. You have to sign up. But the next workshop won't be free. So this is your opportunity to join this workshop, get fundamental knowledge of Forex, and start making profit. Great. Now, one other reason, which is the fourth reason why beginner traders lose their fund, is they don't use stop loss or take profit. They don't use stop loss or take profit. Awesome. Let me open my chart and explain to you quickly what a stop loss is and what a take profit is. Okay, imagine I open a trade at this level. Let me come here. I open a trade here. So at this point, I sold. Come in. Sell order. Okay. Sell order. Come in place. Awesome. I want to show you something. Okay. So now, so if at this level I sell at this level here, and a beginner trader would not think of, if you are selling, which means you are expecting the price to go down, right? The price to fall. A beginner trader would not think that, what if the market reverses? What if I sell expecting the market to fall, and the market did not fall and keeps rising. What if? So a novice trader would not put stop loss, which means the stop loss is that order that prevents you from losing more than you can bear. So a beginner trader, instead of putting stop loss at this level, this red line close to this sell order here, stop loss, which means if I take an order here, if the trade should keep going up instead of going down, when it gets here, it will stop me out. But some beginner traders don't know how to use stop loss and take profit. So when this trade goes against the beginner trader and it keeps going, it makes loss. Okay, what if I we do it this way? A beginner trader opens a buy order here because he sees that the market is going up and he decides to buy. Let me see. Buy. Okay. I believe you're following. So a beginner trader decides to buy here. Now, buy means that the trader is expecting the price to keep going up, right? It's expecting the price to keep going up. But unfortunately, the price goes down. Now, what you can do as a beginner trader, a professional trader would put a stop loss either at this level or at this level, which means if he buys at this level expecting the price to keep going up and the price reverses, if he gets to this line where my arrow is, it will stop him out of the market, preventing him from losing more than he can bear. But beginner traders won't put a stop loss, and then you could see how the trade, the market enjoyed itself falling down. So imagine if the trader buys here, expecting the price to go up, and the market keeps falling down, the trader loses massively. He loses massively, and that is why beginner traders keep losing. They don't set stop loss, and stop loss is very fundamental and key, to your success as a trader. Great. If you have any question, just drop it on the comment section and I would answer you. Don't forget our workshop coming up next week Friday. Do well to sign up in the link below. Don't miss it. It's going to be free for the first time. The first workshop is going to be free. The subsequent one is you have to deposit a minimum of $100 to participate. Great. Okay. Someone said I lost $29 last week. Okay. Great. You see, I'm sure most of the things I'm talking about here are the things that made you lose your phone, that made you lose $29, on a trade. Okay. Now, lastly, beginners traders can't control themselves. Beginner trader, they always have that feeling of always being in the market. Every beginner trader wants to be in the market. They want to be active in the market. They just want to see the market. They want to see themselves trading. But I want to tell you that it is not about the quantity or the numbers of trade you are going to take. It's about the quality of trade. If you are going to take 2 trades, that you have a reason for taking them, just 2, they can make a difference in your account. But if you take multiple trades, thinking is by taking multiple trades, then if this one works out, if this one makes profit and this one makes loss, this profit will cover for this one. We are back to the first reason why beginner traders lose money, which is gambling. So when you can't control yourself, you keep losing money because you always have every reason to want to be in the market, to want to take a trade, and you also lack risk management. And this is why we are putting together this workshop to be able to teach you guys how to trade and not to lose your fund, how to trade like professional traders, how to trade like the bank trades. And that's why it's important for you to sign up for the free workshop that is happening next week, where I'll be teaching you on the Forex Fundamentals. Don't miss it. Great. Now, I've come to the end of today's webinar, and I'm sure you've learned a lot from the 5 reasons I have shared with you, and why beginner traders lose their funds and why you shouldn't anymore. Don't forget our workshop. Do well to sign up. If you have any question, kindly ask in the comment section below and I will answer you. Okay, I'm seeing a question here. It says okay, you check the description section. A link will be shared. You have to sign up to the link. Okay, someone said, okay, sir, how to take a stop loss when my account is $20? How to take a stop loss when my account is $20? Do you mean you are already at $20 loss, or your account is $20 and you want to know how to? Of course, if you have a $20 account, as I said earlier, that beginner traders lose more funds because they start with smaller leverage. Smaller margin. So $20 is not fair enough to open a trade. It's not fair enough to open a trade. I would advise you to start. You can start with $100 minimum. Okay. Someone is asking here. Okay. Yes, of course. When it comes to lot size, that is part of the risk management we're talking about. You are the one in charge of setting your lot size. Of course, this will be discussed in our workshop. You are the one in charge of setting your lot size. It is not OctaFX, neither any broker can set your lot size for you. You will be the one to set your lot size. If you use a bigger lot size, which means you are taking bigger risk, and of course, bigger reward, bigger risk, the bigger the risk, the bigger the reward. However, it is very risky when you are trading with a small fund. Yes. Okay. Someone said, when having a $100 account, should you day trade or scalp? Okay. All right. That is, every trader are different. Are we together now? Now, you begin to discover your trading style. The moment you begin to absorb this fundamental knowledge would teach you guys in the workshop, you begin to understand if you love to day trade, or if day trading works for you, or if inter trading works for you. If day trading works for you, or if swing trading works for you. So if you discover if you are a swing trader, the more you begin to absorb the knowledge we teach you and practice it, you would now know what worked for you. Okay, does swinging my trade works for me, or does trading intraday works for me? Okay, someone said, oh, great. You can see now. It said unnecessarily lost $2,000. Missed those features. Lack of risk management. Of course. So you've learned now. For you to prevent yourself from making such a loss in the future, you've understand the 5 reasons why beginner traders lose their fund. And I've stated it earlier. Said gambling on chart and not trading. They don't understand what margin is, and also they start with the small capital. They choose bigger leverage, and they don't use stop loss and take profit. They also can't control themselves. So these are the reasons why you lose your fund, and I'm sure you understand that. Okay. Yeah, the link to the workshop would be shared in the webinar below. The link to the workshop will be shared in the webinar below. I'm sure you are learning a great deal here. Okay. Okay. Drop your questions in the comment section. Okay. Yeah. Check for those looking for the link. Check the description of the video below. You will see the link there. The link is in the description of the video below. Please drop your question. If you have any question while I go through the comment section, let me know. Just drop your question in the comment section. Okay, I'm waiting for you. Waiting for you guys. Okay. Okay. Check the video description. You would see the workshop link. Check the video description. Sign up. It's free. The first workshop is free, totally free. Subsequent ones, you would need to have a minimum of $100 in your account to benefit from the exclusive training session. And I know you don't want to miss it. You don't want to miss it. You don't want to miss it. Great. You don't want to miss it. For those who will partake, you will get that knowledge that helps you to trade consistently in profit. Yes, I'm sure you've seen the link now. Awesome. So I would like to wrap up from here. Thank you for joining me. For those who joined me from Oyo State, from Ogun State, from every part of Africa, Nigeria, thank you for joining me, and see you at the workshop where I'll be talking about and teaching on the Forex Fundamentals. Register in the link in the description below and get concrete knowledge in the workshop next week. Thank you very much. I appreciate it. Thank you. Yeah, goodbye. Goodbye, everyone. Thank you. Goodbye.